Hello everyone, this is CA Shejal and I welcome you all to my channel The Commerce Bench. So today I am going to continue with my series of financial statements with adjustments questions from TS Grewal. So in the previous lecture we had completed from question number 1 till 4 and today I am going to start from question number 5. Now if I would recommend you that if you haven't seen the previous lecture, please see that once and then you can come back here, because over there I have made you revise one whole question. Okay? So that is important if you want to get an understanding of the things that we are going to do today, because we would not be going too much into the details of the points that we have already done that day. Fine. And this is just a revision video, so please do not expect to go too much deep into the topic. Understood? So I would recommend you to watch that one first. I'll give you the link in the description box. Now let's start today's questions. And one more disclaimer again, that I would not be doing the whole questions with you. I would just be doing the adjustment part, because that is what is difficult for the students, right? Because this part gets repeated very frequently and you will get the same items over here inside the trial balance. So we will not be doing this part. I would just tell you the important points. If any unique point comes in here inside the trial balance, then I'm going to discuss that with you. Otherwise, we will be just covering the adjustments part. Fine? Because that is the only way we can cover it fast. Okay, let's start now. Question number 5 tells us that there is a trial balance and we have to again prepare our balance sheet and profit and loss account from this. Let's start from the adjustments. I always start from the adjustments. First one is closing stock was valued at 7,000 rupees. So what do we do with the closing stock? In the previous lecture, I also told you that whatever things are given outside the trial balance, you adjust them at least at 2 places. Whatever is given inside the trial balance, you adjust those only at 1 place. Okay, we'll go by that rule. So the first place that we are going to adjust closing stock is in the trading account. We are going to write this on the credit side. So we will write by closing stock. How much was the closing stock? It was 7,000 rupees. So we will write 7,000 over here. After that, the second place that we are going to write it in is closing stock goes into the asset side. Because we are going to sell this in future, right? And this is going to provide me some benefit. Hence, I write it as an asset. 2 places we have done this. First one is done. Second one is outstanding liabilities for wages were 600 and for salaries it was 1400 rupees. Let's first find wages. Whenever you get this kind of adjustment, then you have to find the relevant item inside the trial balance. So first they're talking about wages. We have found wages over here. Wages have been given. 12,000 rupees of wages have been given. First thing that you do is write whatever is given inside the trial balance. We always post wages to the trading account. So wages we have written 12,000 rupees over here. Now they are telling us that there are outstanding wages of how much amount? 600 rupees. That means this is an amount that we should have given in this year only, because we have taken the services from the laborers but we haven't paid them yet. But still the fact remains the same, that we have taken the services in this year, then this expense also belongs to this year. And according to the accrual concept, we have to record it in this year only. Hence, we add outstanding wages over here of 600 rupees and we write it, the final amount, in the outer column. Clear? That is how you treat outstanding expenses. Next is salaries also are outstanding, 1400 rupees. How much salaries have we given in this year? 20,000 rupees salary. Salaries always go to the PL account. So let's assume that our trading account would close somewhere here. And we start our PL account below that. So I will write 2 salaries over here. How much was it? I forget the amount. 20,000 rupees. Okay. Now it is telling me that there is an outstanding expenses in the name of salaries also. So I will add the outstanding salaries, just like I added outstanding wages to the wages that I had given in this year. I would similarly add outstanding salaries to the salaries that I have given this year. So it is 1400 rupees. I will add 1400 here, outstanding salaries. This will become 21,400. This is my final amount according to the accrual concept. Now this is the final amount that belongs to this year, because accrual concept says what? Keep whatever expenses you have incurred in this year, you have to record them in your profit and loss account or your trading account, whatever it is, whether you have paid it or you have not paid it. But it belongs to this year, na? That is enough. You have to record it now. Clear? Okay. Okay. Now we have adjusted this one at one place. We have adjusted outstanding wages in the trading account and outstanding salaries in the PL account. So one place they have been adjusted. But I told you this is given outside the trial balance. So we are going to adjust it at least two places. So the second place will be in the balance sheet. Outstanding wages and outstanding salaries. Outstanding wages of how much? 800 and outstanding salaries of 1400 are going to come over here. Okay. Fine. Why? Because this is something that is going to go out of my pocket in the future. I'll have to pay this to my laborers, this one, and I'll have to pay this to my office staff in the future. That's why this is my liability. Got it? I hope this is clear to you. Okay, sorry. This is not 800. This is 600. Fine. Next one, depreciation is to be provided at the rate of 5% on all the fixed assets. So first we'll have to find out what all fixed assets we are having over here. Let's see. First one is furniture and next is plant and machinery. Let's see whether we have any other. We don't have any other fixed assets. So these are the two assets that we are going to provide depreciation on. At what percentage? 5%. But wait. Look at this fourth point. Plant and machinery includes the machinery purchased for 10,000 rupees on 1st October 2022. So it is telling me that this plant and machinery has 10,000 rupees machinery which was just purchased in this financial year only, and we have only used it for 6 months. So this 10,000 rupees machinery has been only used for 6 months. So we will provide the depreciation accordingly. So you always have to be very careful ki whether there is any other point written related to the fixed assets in the adjustments. Fine. Let's do it now. So two places we are going to do the adjustment of depreciation. First, we are going to write it off as an expense. Depreciation is an expense, right? So we are going to write it in our profit and loss account to depreciation. On plant and machinery and on furniture, both we are going to provide the depreciation on. So if I say ki plant and machinery is 1,50,000, so on 1,40,000 rupees we will provide whole 5% of depreciation. But on the rest of this 10,000 rupees, we'll provide it only for 6 months. How are we going to do it? 1,40,000 into 5% plus 10,000 into 5% into 6 by 12. This is going to be the depreciation of my plant and machinery. So let's calculate this. This is 7,000 and this is 250. So this becomes 7,250 rupees plant and machinery. Let's write it over here. 7,250 rupees. And let's see furniture now. 8,000 rupees, no other adjustment is given for this, just 5% has to be provided on it. So 8,000 into 5% is 400 rupees. So we are just going to write 400 here, add them and write 7650 over here in the ultimate outer column of your profit and loss account. I hope this is clear. Two places we have to adjust this at. So the second place will be your balance sheet. How are we going to do this? Plant and machinery you are going to write in the asset side. This is very clear, I hope. This is my asset, so I will write it here. I will write whole 1,50,000 rupees cost over here. Now I know that this 1,50,000 is unadjusted. Means I still have to adjust the depreciation over here. The depreciation that we have calculated for this year, it has not been reduced from here. So we are going to do it now. How much was the depreciation? 7,250. So we are going to reduce 7,250 from here. So this becomes 142,750. Fine. Now this I am going to write furniture also over here. That is also my asset. Obviously that is why I am providing depreciation. So furniture was how much? Furniture was 8,000 I guess. So I will just write 8,000 minus the depreciation that we have calculated 400 rupees, and we are going to write 7600 in the outer column. Now I'm trying to tell what that earlier, look, my machinery was not depreciated. The amount that was given inside the trial balance, that was unadjusted. But I have to show the actual value of my assets to the people who are reading my balance sheet, right? That is what I have done here. I have reduced the depreciation now and shown here. So two places I have adjusted my depreciation. This is the first place. I wrote it off as an expense in the PL account, and second, I adjusted it from the machineries and the furniture in the balance sheet. Understood? Two places we have done this. Now let's come to the last one. Insurance premium paid in advance, 200 rupees. Let's see how much insurance premium have we paid. So we have paid 1500 rupees. This is telling me out of this 1500, 200 has been paid in advance. Let's first write whatever is given inside the trial balance. To insurance premium, 1500 rupees I have paid. But this is telling me that the 200 rupees that I have paid now, that does not belong to this year. This belongs to the next financial year. That means what? I should not be including it in my PL account now, because it does not belong to this year. So I will reduce this prepaid expense from here. This is unnecessary. Why do I write it over here? Okay, so this is 1300 rupees for you. This is the final amount that should be written in the PL account. The actual expense incurred in this year. Now this has to be adjusted at another place also, which has to be my balance sheet. Okay, this will come over here. Prepaid expense of 200 rupees. Prepaid expense, what? Insurance premium. Why does this come on the asset side? Because in the future I will be receiving some service, some future benefit from it, and I will not have to pay anything for it. Hence this comes up as an asset for me. Okay, I hope you got a good revision of your adjustments, of these many adjustments at least. Fine, and you will not be having any problem. Please notice everything that was given inside the trial balance we adjusted just once, at one place only. But everything that was given outside the trial balance we adjusted at least at two places. Okay? Rest of the things you already know. This is opening stock, this goes to the trading account. Debit side, this is debtors, this will go to the asset side in the balance sheet. Then this PL account, trading account, then this will go to the PL account. I have to discuss this with you. Sometimes they give it like this, electricity charges, and they have not written anything in the bracket like factory or anything. So you are going to assume it as electricity charges of the office. Hence you are going to take this to the profit and loss account. Okay? So if nothing has been given in the bracket, always assume that this belongs to the profit and loss account. This is my office electricity. But if they write electricity charges in bracket where they write factory, then assume that this is helping you out in doing your production. Hence it is a direct expense and it will go to the trading account. Understood? So this is where they sometimes create a confusion. Then they can also give you power. Power they will give you on the debit side, and you will have to take it to the trading account because this is also a direct expense. Fine. Now let's come here. Understand that they have written commission, they have not written paid or received over here, but please notice this is written on the credit side. So you always have to keep your mind open. They have written commission, but it is given on the credit side. That means it has been received. Okay, this is a question number 6. Now read. They have again told you to prepare a trading account, profit and loss account, and a balance sheet. So again, we are going to start from the adjustments itself, right? And any important points I will tell you that are inside the trial balance. First one is again, stock as on 31st March 2023 was valued at 2,30,000 rupees. This is our closing stock, and we write it in the trading account first by closing stock 2,30,000. Then we are going to take it to the balance sheet. Closing stock 2,30,000. Okay. Next, write off further 1,800 rupees as bad debts and maintain the provision for doubtful debts at 5%. Now I am just going to do the adjustment over here. I will not explain anything because I have given the explanation in question number 4 in the previous lecture. I will give you the link. You can go from the timestamps to question number 4 straight and see the explanation for this. Okay, right now I'm just going to do this, otherwise it will take again and again a lot of time if I keep on repeating the same explanation for every entry. Fine, so let's do this. I'll just tell you the steps how to do it. First thing that you will do, find everything that is related to bad debts, provision for doubtful debts and sundry debtors inside the trial balance. First you have to find that. So what have we found? If we see bad debts here, we find bad debts inside the trial balance first. So we find this bad debts, 5,500 rupees is the bad debts that had happened during the year. This one we came to know after 31st March. Okay, that is why it comes to me as an adjustment. So first we will adjust this 5,500 rupees. Where are we going to write this? Suppose my trading account is ending over here. So I will write here two bad debts. First I will write whatever is given inside the trial balance, that is 5,500. Only once I have to adjust this. So I have written it in PL. Second thing what I have to do, see 1,800 is further bad debts. Bad debts again have to be written as a loss in my profit and loss account. So what will I do? I will increase my loss. This was already given to me in the trial balance. I will increase my loss now. Further bad debts I will add to it 1,800 rupees and I will write how much was the final loss that I got during the year. 7,300 rupees. Fine. Both of them belong to this year. It was just that I had already recorded this one before 31 March, but I had not recorded this. So I will now record it. There is no problem. Okay? One place is this that we recorded. Second place is where? First, you write sundry debtors. How much were your sundry debtors? Let's see our balance. So our sundry debtors were how much? This is my sundry debtor, 62,800. I am going to write 62,800 and you already know anything that is given inside the trial balance is already adjusted. Hence, we are just going to reduce the further bad debts from here. That is only 1,800 rupees and not the 5,500 rupees. So this we will get what? 61,000 rupees is my final value after reducing the further bad debts. Got it till here? Okay, now bad debts adjustment has been done. We have to continue with it. Maintain the provision for doubtful debts at 5%. I have given a very good explanation of this point in question number 4 in the previous lecture. Please do see that. The only new point that we have been given over here is that there is already a provision that we might have created in the previous years. That is why it is given inside the trial balance. Okay? What are we going to do with this? This 9,000 rupees provision, this 9,000 rupees piggy bank, you can say, I am already having. You don't have to do anything about it, just cancel it off in the profit and loss account. I told you whenever we are making a new provision, we write it in the debit side as an expense that we are setting it aside from the profits. What are we going to do when we cancel off the previous provision? Obviously, you are going to write it on the credit side. Okay, the opposite thing we are doing. So, by old provision for doubtful debts, just without thinking, if you find provision for doubtful debts inside the trial balance, write it on the credit side. The whole amount you are going to write on the credit side. It cancels off your previous provision that you had made. Now we are going to start from a new beginning and we are going to create a new provision at 5%, the exact thing that the question has told us to do. Now 5% of what amount are we going to take this 5%? 61,000 rupees, because this is the amount of my doubtful debts. Clear? So 61,000 rupees ka 5% we'll do 3,050 rupees. We are getting this much amount I have to make. I will make it on this side. New provisions we are making on the debit side. So new provision on doubtful debts 3050 we will set aside from the profits now. And previous, the old provision that was inside the trial balance, we have cancelled it off. Clear? Okay. So one place we have adjusted this. The second place would be, we are going to reduce this, the new provision from the sundry debtors that are remaining, that is from 61,000. The new provision for doubtful debts 3050 we will reduce and we'll get 57,950 rupees. Understood? The explanation though I have not given in very deep today because I had done this previously now. So we don't have to waste so much time again and again. Don't worry about this. I will give you a very good summary when we reach on question number 8. That is having bad debts, provision for doubtful debts, and provision for discount on debtors as well. I will give you a very nice summary over there, how you have to treat it. Fine. Okay, now let's move to the next one. Depreciate machinery at 10%. This is so simple. How much machinery do we have? 93,400 rupees. So 93,400 is my plant and machinery. 93,400. We are going to provide depreciation on it. 10% has been told. For first place that we adjust it in is write it off as an expense. Okay, to depreciation 93,400 पे 10% means 9340. And here also we will do that. We will reduce 9340 from here. I'll not explain this now. You have to understand it yourself. 84060 is going to be my final value of my plant and machinery. Fine. The last thing, provide 7,000 as outstanding interest on loan. Please note, we are having a loan of how much? 78,800 rupees we might have taken in the previous years or maybe during the year, whatever. So we have 7,000 rupees outstanding interest on loan, means I had to pay some interest on this but I have not paid it. So what am I going to do? Let's first see whether we have paid any interest. If we would have paid any interest, that would have come inside the trial balance. But we have not paid any interest. Okay? That means what? Whole 7,000 is outstanding for me. So I will write it as my expense to outstanding interest on loan 7,000 rupees. Because I should have paid it in this year, right? This 7,000 belongs as an expense to this year, but I have not paid it. But according to accrual concept, I have to write it off as my expense in this year only. So I have written it on the debit side. Next thing that I am going to do is on the liability side, I'll write loan. How much was my loan? 78,800. So this to I will give 78,800. And next, outstanding interest on loan also I will pay off. 7,000 rupees I will write as a liability because this will go out of my pocket in the future. Clear? So one place is this. Second place is this. And loan was given inside the trial balance, so I adjust it only at one place, that is only as a liability in the balance sheet. Understood? I hope all the points are clear from here. Now one thing, whenever charity comes charity comes in your trial balance, you are always going to assume it as an expense, as an indirect expense, and hence you will always treat it in the profit and loss account. Okay, charity is what business is basically making some kind of donations. Then we are going to obviously consider it as an indirect expense because this is not directly putting any effect on my production. So I will write it off as an indirect expense in the profit and loss account. I hope this is clear. There is no new point in this question. So let's move on to the next one. Question number 7. Now let's take it up as the last question for today, and then we'll continue in the future videos the rest of our questions. Okay, let's take it up. First, now you have to again prepare trading profit and loss account and balance sheet from this, and I am going to start from the adjustments as always. So read the first one. This is the most important point. Closing stock at cost as on 31st March 2023 was 2,600,000 rupees. This was my cost of the closing stock that was remaining at the end of the year. This was my cost. Whereas its net realizable value, means kind of the market value, was how much? 2,05,000 rupees. So they have given me two values. Up till now what we have seen, they give me just one value and I write it first in the trading account credit side and second in the balance sheets asset side. But now they have just given me two values and they have asked us to adjust this. Okay, the treatment is going to remain the same. We are still going to do it in the trading account and in the balance sheets asset side. However, which amount do we write out of all, both of these? You always have to see which amount is lower. What is your net realizable value? Aise? Net realizable value means the market value minus if any amount you have to give, any expense you have to do in order to sell that. Okay? So this is the cost. This is my cost. And this value, net realizable value, is my market value basically. If I go and sell out my closing stock, how much money will I get? So I will get only 2,05,000 rupees. This is what they're trying to tell me. Now, what do you have to do? Just don't worry about it. You just have to take the lower of both of these. Which one is the lower one? 2,600,000 rupees is the lower, that is cost is lower. If I go out to sell this, I will get 2,05,000 rupees. I don't have to write this. I have to write this in my accounts, in trading account and balance sheet. Why? Because this is due to the prudence concept. Please note this. Prudence or conservatism concept. You can be asked this also. Ki why do you have to value it at lower of net realizable value and cost? Due to prudence or conservatism concept, because this concept says that you have to record all your losses. If you anticipate any loss, record it today itself. If you see any profit in future, do not worry about it, do not record it anywhere unless you realize it. This is what my prudence concept says. That is what it is trying to say, ki do not record it at more value. Because if suppose you are writing it on in the trading account, in the credit side you write 2,05,000, don't you think कि when the credit side increases, so it will also increase your profits unnecessarily, right? Jabki what is the truth? You have not been able to sell it right now. It is still in your go down. It is still lying there. So you don't have to inflate your credit side, your profits unnecessarily because of this. Write it as this, सीधा सीधा, ठीक है? Don't act very smart. Write it at your cost, that is this or this, whichever is lower. Understood? I hope you got the reason also. This was a revision lecture. I did not have to tell so much, but आदत से मजबूर. So first place that I am going to adjust this in is closing stock 2,06,000 rupees. Okay, I am not going to inflate my credit side because of something that I have not even realized yet. First place, and the second place is my balance sheet. Treatment is going to remain the same. 2,06,000. I hope this is clear. This was the most important point, and you have to remember this word also, prudence or conservatism. Next is depreciate building by 3,000 and furniture and fittings by 2,500. You have to write off depreciation. First place that we write it off in, suppose here my trading account is ending. So I will write it here to depreciation, so plant and machinery and furniture. How much? Sorry, this is your building, not plant and machinery. Building. Yes, how much? This is 3,000 and 2,500. So 3,000 and 2,500. Total will be 5,500 rupees. Next, you will have to write this furnitures and fittings and building from the trial balance to in the balance sheet. So let's find it. Furniture and fittings is here. Where is plant and where is building? Building is here. Yes, 2 lakh rupees building we have. Building less depreciation, 2 lakh rupees building, and the depreciation on this was 3,000 rupees. That means I'll write 1,97,000 over here. Now furniture and fittings, let's see how much this is. This is 26,000 rupees. So I will write furniture 26,000 rupees and the amount of depreciation was 2,500. So let's calculate this. 26,000 minus 2,500 is 23,500. Okay, that's it. Next, make a provision of 5% on debtors for doubtful debts. Let's find out whether we have any other things that are related to sundry debtors, bad debts or provision for doubtful debts. Let's find out. See, debtors, so we have 1,80,000 rupees. And do we have any bad debts or any old provision? We have bad debts though. Written off 8,000 means we are going to write this at one place only. This is given inside the trial balance. That means it is already adjusted. So I will write 2 bad debts. Sorry, I will not write it inside. In the inside column, I will write it straight off outside. Because I don't have any further bad debts, so I can write it in the outer column. Now I will make 5% of provision on this debtors. 1,80,000. Do I have to reduce the this debtors of 8,000 from this 1,80,000? No, this is already adjusted over here. This is already adjusted because both of them are inside the trial balance. Okay, so on 1,80,000 I'll have to make my provision. This becomes 9,000 rupees. I don't have any old provision to cancel it off on this side, so I will just create a new provision now. To new provision for doubtful debts, I have to create 9,000 rupees provision. This is the first place I adjust it in. Second place, I write it off in I reduce it from the sundry debtors. How much was my sundry debtors? 1,80,000. 1,80,000. I have to reduce the new provision for doubtful debts from here, which is 9,000. So means what? How much will I get? 1,71,000. This is the final amount of my debtors that I would like my readers to see. Ki bhai dekho, I am not sure whether I am going to receive this 9,000 rupees or not. Hence, I am creating a provision for it. This is the final amount that you can be sure ki haan, this much so I will get from my debtors. This is something I'm not sure about. So let's create a provision for that. We have set aside it from the profits of our profits of this year. Clear? Fine. Next point, carry forward 2,000 for unexpired insurance. What does unexpired insurance means? Simply it means that we have prepaid some amount in the name of insurance expenses. So carry forward 2,000 means 2,000 is your prepaid amount. What do we do with it? First we find how much have we paid in the name of insurance. We have paid 20,000 rupees, and out of this 20,000 it is telling me 2,000 is prepaid. How will I adjust this now? First step is to always write whatever is given inside the trial balance related to that item. So to insurance 20,000 rupees I have written, I have paid this much, but it is telling me you have to carry forward the 2,000 rupees. 2,000 rupees means it does not belong to this year. So prepaid insurance is 2,000. I am going to reduce it. This does not belong here. So 18,000 rupees is the final amount that I am going to show in the outside column of my PL account. Fine. Next place is prepaid insurance. I will show as an asset. Why? Because I am going to receive some benefit out of it from future and I will not have to pay for it. Simple. Fine. Next point, outstanding salary was 15,000. Very simple. Let's just do it. I'm not going to explain it now. Salaries is 90,000 rupees. Two salaries, 90,000. This was given inside the trial balance, and now we will also show outstanding salaries as a part of expenses of this year. This was 15,000, right? Yes. So this becomes how much? 1,05,000 in total. This should have been my actual salary that I should write as my expense in the current year. Also, I'll have to write it off as a liability because I have to pay it in future. So outstanding salaries only 15,000 rupees. Okay, now we have done all the points over here. We have done all the adjustments. In the name of any unique point, what do you have here? Just carriage on purchases. So sometimes instead of just carriage, carriage inwards, they are going to write carriage on purchases. This also means the same thing as carriage inwards. Matlab ki on purchases, when we were purchasing the goods from somebody, from the seller, and we had to bring it to our factory, then we had to pay this carriage. This was on purchases. We are going to write it in the trading account. Okay, you can write it here, to carriage on purchases. So these are this kind of different names that they give to the same item, 18,000. Fine. I hope this is very clear to you. So we have done this question. I hope you understood everything. If there is any problem, you can let me know in the comment section. We are going to continue with the leftover questions in the upcoming videos. Fine. So that's it from my side. If you like this video, please share it with your friends, like it, and subscribe to my channel for more such content. Thank you so much.